Are you ready for this tax season, or are you still plagued by credit myths that might land you in hot water? It's that time of year again, folks. A time when the air is thick with anticipation and the mailboxes are filled to the brim with W-2S, 1099-S, and a host of other tax documents. Yes, tax season is upon us, and it can be a confusing time to say the least. Now, we all know that taxes are as certain as death, and just about as fun. But what compounds this annual headache are the countless credit myths that seem to circulate just when we're trying to get our financial ducks in a row. We're talking about those pesky misconceptions that can leave even the savviest of financial enthusiasts scratching their heads in confusion. Perhaps you've heard a few of these myths yourself. Maybe you've been told that paying your taxes late won't affect your credit score. Or perhaps you've been led to believe that you only have one credit score. These myths, and countless others, can lead to financial decisions that might land you in a whole heap of trouble. But don't worry, we're here to help. Today's video is all about debunking these credit myths and providing you with essential credit repair tips. We're going to dive deep into the world of credit scores, tax payments, and financial planning to give you the knowledge you need to navigate this tax season with ease. So, are you ready to face the tax season head-on? Are you ready to debunk those credit myths and repair your credit? It's time to dust off those tax documents, sharpen your pencils, and arm yourself with the right information. Prepare yourself to break free from these myths and arm yourself with the right information. Let's dive in and ensure we're not fooled this tax season. Let's make sure we're making the most of our hard-earned money. After all, knowledge is power, and in this case, it's the power to make informed decisions about your financial future. First off, the myth that paying taxes late won't affect your credit score. It's a common misconception, but let's shed some light on the truth. If you think you can delay your tax payments without any repercussions, you might want to think again. Here's what actually happens. When you owe the government money and fail to pay your taxes on time, the IRS can file a public document known as a federal tax lien against you. This lien is a claim by the government on your property, and it's pretty serious business. Credit bureaus can see this lien when they're assessing your creditworthiness. And guess what? It's not a good look. This lien can significantly lower your credit score, making it harder for you to get loans or credit cards in the future. So, the moral of the story, don't mess with the IRS. Pay your taxes on time and keep your credit score healthy. Remember, pay your taxes on time to avoid any negative impact on your credit score. Next up, the myth that you only have one credit score. This is a common misconception, but in reality, you have more than one credit score. Think of it this way. There are different flavors of ice cream, right? Vanilla, chocolate, strawberry, and so on. Similarly, there are different credit scores for different purposes. For instance, there's a score for mortgage lenders, another for auto lenders, and yet another for credit card companies. Each of these scores is calculated differently based on what that particular lender considers important. Furthermore, your score can vary based on the credit bureau. We have 3 major credit bureaus in the United States: Experian, Equifax, and TransUnion. Each bureau collects different information, so your score may differ from bureau to bureau. So let's bust this myth once and for all. You don't have just one credit score, you have several. Keep in mind, you have multiple credit scores, not just one. Now that we've debunked some myths, let's move on to some credit repair tips. First, regularly review your credit reports. Understanding your credit reports is like understanding your financial DNA. It's a snapshot of your financial behavior, your habits, your responsibilities. It's more than just a number. It's a narrative that tells lenders who you are as a borrower. Let's delve into the importance of reviewing credit reports regularly. Think of your credit report as a health checkup, but for your finances. Regular checkups can help catch any potential issues early on, and the same goes for your credit report. By routinely reviewing it, you can spot any errors or inaccuracies that may be dragging your score down. Did you know that 1 in 5 people have an error on at least one of their credit reports, according to a study by the Federal Trade Commission? This is why it's crucial to review your reports from all 3 credit bureaus: Equifax, Experian, and TransUnion. Each bureau may have different information about your credit history, and thus, the more eyes, the better. What should you look for when reviewing your credit reports? Keep an eye out for unfamiliar accounts or charges, incorrect personal information, or negative items that should have aged off your report. If you spot any inaccuracies, it's time to take action. Report these inaccuracies to the credit bureau and the company that provided the information. Remember, it's your right under the Fair Credit Reporting Act to dispute any information on your credit reports that you believe is inaccurate or incomplete. It's not a quick process, but it's a crucial step in repairing and maintaining your credit health. Credit repair isn't a one-time fix. It's an ongoing process of regular checkups and maintenance. And, just like maintaining a healthy lifestyle, it requires consistency and discipline. So folks, make it a habit. Every year, take advantage of your right to free annual credit reports from each of the 3 major credit bureaus. Knowledge is power. And in this case, knowledge can mean a healthier credit score. Stay on top of your credit reports to ensure they're accurate. It's one of the simplest yet most effective ways to stay financially fit. Now, let's move on to our next credit repair tip. Another essential credit repair tip: pay your bills on time. Let's dive into why this is so important. Your payment history accounts for approximately 35% of your total credit score. This means that every time you miss a payment deadline, your credit score takes a hit. But why does this matter? Well, a lower credit score can make it harder for you to secure loans or credit cards in the future. It can also mean higher interest rates, which means you're paying more over the life of your loan. Now, we're not saying you need to pay off your entire credit card balance every month, although that's a good habit to get into. What we're saying is, at the very least, make the minimum payment on time. And remember, it's not just about credit cards. Utility bills, car payments, even your rent can also impact your credit score if they're not paid on time. Timely bill payment is crucial for maintaining a healthy credit score. As we wrap up, remember, don't be fooled this tax season. Let's take a quick jaunt down memory lane, shall we? We've shattered some pretty hefty myths that could lead you down the wrong path and potentially damage your credit score. And we've also shared some pretty solid tips to get your credit in tip-top shape during this tax season. Myth number 1, paying taxes late won't affect your credit score. Oh, how we wish this were true. But the reality is, if you owe the IRS and don't pay on time, they can file a tax lien against you. This lien is public record, and it can seriously hurt your credit score. So, don't put off paying those taxes, folks. Then we tackled the myth that you only have one credit score. This one's a whopper. In truth, you have multiple credit scores, each calculated differently depending on the credit bureau and the credit scoring model. The big 3 bureaus, Experian, Equifax, and TransUnion, all have their unique scoring models. It's essential to understand this so you can monitor all your scores and know exactly where you stand. We also emphasize the importance of reviewing your credit reports. Remember, these reports are like report cards for your financial behavior. They show your credit history, including how timely you pay your bills and how much debt you owe. Mistakes can happen and they can cost you. So make it a habit to review your credit reports regularly and dispute any errors you find. Speaking of paying bills, we touched on the crucial role of paying your bills on time. This is one of the most significant factors influencing your credit score. Even a single late payment can cause a substantial dip. So, set reminders, automate payments, do whatever it takes to ensure you're paying on time every time. This tax season, don't let the myths fool you. Be informed. Be proactive. Protecting and improving your credit score isn't a one-time thing. It's a continuous process. It's about making smart, informed decisions and sticking to good financial habits, like paying your bills on time and regularly reviewing your credit reports. Remember, your credit score is more than just a number. It's a reflection of your financial health. It can affect your ability to secure loans, rent an apartment, even land a job. So take it seriously. Don't let myths and misconceptions lead you astray. Equip yourself with the right information and you're already halfway there. With the right information, you can navigate this tax season smoothly and keep your credit score healthy. So don't fall for the myths and take charge of your credit.